highlighted, ETF tracks the underlying index. These ETFs are available on the exchange. So just giving an example of one of the ETF which is available on the exchange. Okay, you can buy that particular ETF at a price which is you can see on your broking platform. For example, in your case, it is Kotak Securities platform. If you can go and type any of the ETF which you want to buy, okay, you will be able to see the live price at which that particular ETF is trading. So you can buy and sell ETF at a real-time basis. There are intraday facilities which are also available in ETF, which people take into consideration before buying and selling ETF. There are various other facilities like you can understand the underlying portfolio, because your portfolio is very transparent, because you are buying an index, so you know what are the constituent of the underlying index before buying an ETF. So you can do an entire study of the portfolios. Like for example, we have few market cap index, we have sectoral thematic index, there are smart beta concepts. So these all portfolios are available on daily basis. So before investing, you know all the details about the constituents, all the weightages of the constituents. So you are making a very informed decision before investing. And the third and the last part is these ETFs are available at a very low cost. If you compare the cost of ETF compared to any other product, it is comparatively cheaper. The most important part is because this is passively managed, there is a very limited fund manager's intervention. So it is not that your index has an X stock and you want to buy a Y stock from the ETF, you will not be able to do it, because whatever is a part of the index, the fund manager will buy that particular stock itself. So there is zero fund manager intervention in case of ETF. The core important aspect that why people prefer investing in ETF, as I highlighted in my earlier discussion also, there is a buying flexibility. So you can buy it at a real-time NAV just like stocks. You can diversify your portfolios through investing in equity, debt, gold, silver, based on the percentage, based on your risk return profile, based on your requirement. You can diversify your portfolios. Third important point was you need limited corpus for investment. So there is no minimum ticket size or there is no minimum requirement per se. You can buy 1 unit of ETF at whatever price it is trading. So every ETF has it is ranging between 50 rupees to 500 rupees. So there are various ETF which are ranging between 50 to 500. It's a cost efficient structure. If you see the cost compared to other products in the market, ETFs are at a lower cost. From a tax efficiency standpoint, I'll just highlight one example here. So if you buy stocks and there's a dividend declared in a stock, whatever dividend you get, you pay full tax over that dividend. But in case of an ETF, whatever dividend has been received by the underlying stock, that dividend gets reinvested. And whenever you redeem, because we are mutual fund, there is no tax on mutual fund units. So when the investor redeems, he will get the dividend as a part of your capital appreciation. So there is no taxation issue in case of dividend payment. As I highlighted, because these are all index driven product, these are transparent in nature. The portfolios are available on daily basis. It's available on the website of the AMC as well as the index provider. This you can do an arbitrage strategy, which I highlighted, that if you want to buy a ETF say in the morning and you want to sell it by day end, that facility, if it is available with you, you can do an intraday trading in a particular ETF, which you see that there is a scope of arbitrage to be created there. This is a differentiator, basically how ETFs are different from other instruments which are available in the market. So I'll bucket ETF as passive funds. There's a concept called index fund. There are active mutual funds and there are stocks. So ETF, because all these are traded based on units, ETF, index funds and mutual funds are managed by asset management company. So it comes as a mutual fund unit. So all three are known as mutual fund units. ETF, the core USP is that you can buy it from the exchange at the live price, what you are seeing between 915 to 330. But in case of index fund and active mutual fund, you get a day end NAV. So whatever is the price at 330 of the exchange, you get that price in case of index fund and active mutual fund. Diversification is offered across all instruments. Okay, but in case of stock, the diversification is not there because there the corpus is also required is higher. DMAT is required for ETF. Index fund, there is no DMAT requirement, nor for active mutual fund. Stock and ETF, there is a DMAT requirement. Broking account, again, because it's a DMAT linked, ETF and stock have a broking account requirement. Index and mutual funds don't require a broking account. In case of passive funds, which is ETF, and in case of stock, the price is derived by demand and supply. So if there are higher number of sellers or higher number of buyers, that can distort the price, because the market, the stock market, is also dependent upon demand supply attribution. So if a particular ETF where only there are multiple traders or multiple buyers, the price can go into one side. So the thing is, you have to see the spreads, you have to see the liquidity of an ETF before investing. So it should be, the spread between buy and sell should be very narrow. It should not be very wide.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.